Morning, everybody. How are we all doing? Morning, Danny, FTNet, Leon. How are you? Happy Thursday. FOMC's out the way, finally. Morning, Joe. So I haven't managed to get anything planned or done this morning from Tuesday. I was planning to get that poll out, basically. I haven't had a chance to do anything. I've just been trying to get this opening range breakout EA finished. And I'm struggling with time, basically. So sorry, I haven't managed to get anything done. I have got a lot of stuff done on that. I've been doing a video on the new EA, and it's quite complex. So it's taking quite a long time to edit because there's a lot of detail. So I've lost basically the last 2 days. Anyway, so this morning I'm just going to go through the normal stuff. Just going to have a look through FX, look through the indices, see what happens at the open, do a recap of yesterday's FOMC meeting minutes, of which there are a lot. It was a busy one last night. He went on for nearly an hour last night, Powell. I almost fell asleep watching. But yeah, a lot of information from Powell yesterday. Had a good look through it last night, trying to pick apart what the expectations are, and it's quite difficult. So we'll wait and see. But morning, Chris. Worth the wait. So yeah, we'll go through that in a minute and figure out what the hell is going on there. Let's just quickly look at what's going on this morning with the DAX and the FTSE. Not an awful lot at the moment. Broken along on the DAX, but not really very convincing. Yeah, not a lot of price action this morning. Bit weak. Morning, Barry. So we'll start with the news as usual. Obviously, today is another massively busy day. It's going to be interesting to see what happens today. We've got 2 interest rate decisions today. The unemployment rate came out last night for Australia at 4.1. So as forecast, no change. If we look at the ADR dash, we've got some movement across the board on the New Zealand dollar. But anyway, Aussie New Zealand has hit ADR to the upside. So we had a bit of a wick down there on the news, and then we've spiked up. If you look at the Australian dollar, weak mainly, but not dramatic. So the news has obviously weakened the Aussie, but not very much. The claimant count for the pound came out at 7 o'clock. That was 44.2k on a forecast of 7.9. This is the number of people claiming some kind of benefit for unemployment through the roof. So indication of some movement in the job market, but it's not positive. So if you look at the pound this morning, it's a very, this is where the news came out, 7 o'clock, that candle there. So we had a big spike on it, but no real directional bias from the pound. It is definitely weak. It should be a downward movement. And obviously, as you can see, it had, but not really convincing. So the market doesn't seem to really be too interested in that at the moment. But there's a lot of movement all over the place this morning. So it's difficult to figure out. A lot of banks and institutions will be making moves today based on FOMC and readjusting portfolios based on what their analysts are going to come up with today based on the US dollar. So obviously the analyst's job today will be to pick apart the FOMC statement, look at the risk portfolio, look at the risk profile for their US dollar holdings and adjust as necessary. So we could see a lot of movement on the US today. The likelihood is they will use the Swiss and the pound interest rate decisions to dump that liquidity into the market. So it could be a very volatile day today, very good for breakouts. So we'll see what happens with those. But nothing really to report home with that. I'm quite surprised we didn't get a bigger move off of it, to be honest. But it's not the unemployment rate, and that is the important one. Claimant count changes with population as well as jobs. And people just start to claim at certain points with this. So if you get made redundant from a job, you get redundancy a lot of the time. You don't go immediately in and start claiming. So the claimant count change is not seen as a particularly accurate indication of employment, which is why we use the unemployment rate. So we'll see. But anyway, ECB, we got Lagarde speaking now. So we'll see if she says something this morning. Villeroy's speaking at the moment. Then we've got the SMB rate at 8:30. So again, this one is coming out this morning. We're expecting them to drop it, but like I said yesterday, 50% of the time they do something different to forecast. So if you look at the last four we've had, so going back to March 2024, so going back basically a year, 3 out of 4 interest rate decisions have not been what they said they were going to do, or not what the market forecast. Market finds it very difficult to forecast SMB policy because SMB do not say anything. The Swiss are super tight-lipped. They don't let any information out. You'll never see a talking head from the Swiss National Bank. Very, very rare. Jordan will speak. So we'll see what happens. But this obviously could start off a move this morning, specifically with so much going on in the world at the minute. Anything can happen, but 0.25 is what's forecast. So we'll see where that comes out. That's coming out in 20 minutes. Then we've got the pound rate. Again, 4.5 is the forecast, not expecting it to change. This is the number that's important. So this is the forecast for freezing, raising, and dropping interest rates. If that comes out different, that is seen as an indication of the next rate will likely be. So this is the actually important. I mean, if this comes out different to forecast, obviously that's catastrophic anyway. But if that comes out different to forecast, that is the future price predictor. So this is the important part of that. Then obviously we've got Bailey speaking in at 12:30, and he will outline what's going on in the next quarter. So 12:30, and then we go into Macklem speaking at 4:50 this afternoon. So by the time New York opens at 1:30, we'll have all of this out the way. But yeah, so basically chaos this morning. Be prepared for stuff to just go wherever it wants to go. Morning, Lucas. So yeah, that's today's news. Just quickly see what the indices are up to. DAX is pulling back inside range. FTSE's thinking about a break. Not very hard, but DAX not really going anywhere. There's not a lot of volume this morning. The ranges are too small this morning, so I won't be taking any trades on this at the minute. It's too weak, but the SIH has gone long on both. So hopefully we get a break long on one of them. So that is the news coming up today. Looking at what happened overnight, the FOMC statement, obviously we got the 4.5%, which is what we were expecting, which is there. The forecasts moving forward, it looks from the dot plot like we are expecting by the end of next year to be sitting somewhere around about the 3.5% mark. So that is a 1% drop in 12 months, which means it's only 1.25 increment change every 3 months, every quarter. That is the optimistic level. It's more likely, with what's going on with inflation and what's going on with trade tariffs at the moment, that we won't get anywhere near a 1% drop, which means from a short to medium term perspective, it's slightly bullish for the US dollar. But no one's going to want to pile into the US at the moment with what Trump's doing with tariffs, because these tariffs are just going to strangle growth, which is not going to be good for the US. So the dot plot, I think, is fairly optimistic. That is more likely, I think, where we will end up, which is where they're expecting us to be by the end of this year. So this is the 2025 forecast, and the 2025 forecast is around about 3.75, which means we've got 3 drops this year. Yeah. Not convinced myself, but we'll wait and see. So there's a lot of information that came out. Overall, very bearish on everything. So yeah, inflation sticky. Yeah, interest rates and easing might be difficult to do. Growth probably not going to be particularly big. So Fed projections imply 50 basis point cuts this year, 50 basis points more in 2026. So there you go. So that's the 1% that I was talking about. But this year, bear in mind, we're only in March, 2 rate drops, which means no drops, no weakness foreseen this year in the dollar. But everything in here is pointing towards no strength either. So neutral. Obviously, with what's going on in the world at the moment, everything changes every time he opens his mouth, and everything changes every month at the minute. It just seems every time someone opens their mouth, it's a completely different stance on everything. So 4 of 19 officials here, which is quite important, sees no cuts in 2025. So basically, around about 20% of the Fed don't think we should drop interest rates at all, which is obviously super cautious and worried. So it's all not looking great as an outlook, basically, for the US. So making America great again, the Fed certainly haven't got any faith in it. The rest of the world haven't got any faith in it. And the 2 most hated people on the planet, and it's quite an achievement to have the entire planet hate you, are running this thing. So we'll see what happens. Somebody posted on my timeline in Facebook yesterday. It's actually quite hard to be have the entire planet hate you. Usually that only happens in Star Trek. If you think about it, there's usually, or in a Bond film, there's one person that is like hell-bent on destroying the planet, the universe, or whatever it may be. We got 2 of them at the moment. So tricky. Thankfully, though, we're making one of them bankrupt. He's lost 100 billion off of his wealth, apparently, Musk, in 3 months. That's got to hurt, isn't it? Anyway, don't buy Tesla. I also saw yesterday a really funny sticker. There's a Tesla parked at the end of my road. And I went to the shop yesterday, came back, and I walked past this Tesla. And I said in the live room the other day about when we drove past as a family the other day, we were in really slow moving traffic. We drove past a person in a Tesla, and I said to everybody in the car, I said, when we drive past him, just stare like that and see what he does. And the guy in the car clocked us and hung his head because he was embarrassed to be in a Tesla. The guy at the end of the road has stuck a sticker on the back of his car that said, I bought this thing before Elon became crazy. Brilliant. So he's basically trying to stop people spray painting his car, which is probably going to work because it is quite amusing. But anyway, that's a side note. But yeah, so it's not good news for the US, basically, from FOMC, which doesn't strengthen it, doesn't weaken it, doesn't really do anything. But it certainly means that there's no indication of strength for the US at the moment. So if we look at what the US did yesterday in FOMC, we got this. And this morning we've got that. So it's basically an A-shaped recovery. So obviously when you get a news spike on news that is not news, it's the buy the rumor, sell the news, basically. So we're back to where we started yesterday, this morning. There's absolutely no bullish or bearish stance from yesterday's move. So we were on our way down, meaning that we had some strength creeping into the US before that news yesterday. So I'm hopeful that the market is going to look at what happened yesterday as, okay, well, if we're not dropping interest rates very much over the next year, we shouldn't really sell too much US, which means they may be buying some of it back. So it might be that we see some gradual strength start to creep in to the US dollar. As we know, it's petered out, the move. the piling out of the US has kind of slowed right down. So we've got a triple bottom going in today. If this holds and we can get a break above the highs today on news, I think the market will look at this as, okay, let's stop selling the US dollar. Not necessarily buying it, but a weak Swiss franc obviously will give the US the advantage. A weak euro will give the US the advantage. So it doesn't have to be strong for these moves to play out. These guys can be weak. Yeah, so don't forget there's always two currencies in play. One is pushing, one is pulling. If that happens at the same time, you get a strong move. If they both push together, you get a sideways move. If they both pull together, you get a sideways move. You only get parabolic movement when one is strong, when the other one is weak at the same time. That's where we get these parabolic squeezes from. So upshot, very difficult to call, but I don't think it will weaken the US, which is a good thing because I've got longs on. So as you can see this morning, we have US dollar strength coming in. We've broken the lows on the Aussie US. The pound US and the euro US are attempting to run yesterday's lows at the moment. So if we break that, we are going to get a flush today, and I think we'll see an ADR. But I think there's probably more likelihood that they will do these moves on interest rate decisions. So they'll use the pound and the Swiss, which comes out in 10 minutes now, to dump some liquidity into the market, because I know there'll be a lot of buying or selling of Swiss and pound today. So that's the time when you're going to stick the US dollar through. So let's see what happens there. Morning, everybody else I haven't said morning to. Can't remember where I got to. Don, Lucas. Can't remember who I said hello to. So there you go. That's the news overnight. There's nothing much else. Zelensky's pushing for a ceasefire. Putin is pushing for a ceasefire, but on his terms, which means you don't hit me, but I can hit you. Obviously, that's not going to work. So Trump's failed completely in his attempts to secure peace in Ukraine, which is not surprising because I don't know why you thought he was going to fix it in 2 weeks. It's been going on for years, and you're dealing with Putin. Then he's living on cloud nine, the guy at the minute. But so there's nothing much else happened overnight with that. There's no escalation either. So again, Swiss franc, yen, gold, safe haven runs. Nothing particularly expected to happen short term on those, but obviously that can happen any time. It seems that Trump has got about as many cards as Zelensky. Remember, Zelensky's got, you're not holding the cards, Zelensky. Trump, you're not holding the cards either. Putin is. So wake up. Anyway, so that's all done. Lagarde is speaking at the moment. So watch the euro. Got a bit of volatility creeping in on the euro. Lagarde is talking. Bit of a spread there going in. Let's quickly look at the indices because they will be affected as well. Clean break on the FTSE this morning. Approaching 2R. DAX, railroad tracks. Nothing going on. No trades on the 15-minute ranges. Might get a 30 today. Okay. Right. That's the news covered. So just going to quickly look at what's setting up today. If there's anything you want to discuss this morning, fire away in chat. And we can talk about whatever, obviously. It's all confidential in here. Don't tell anybody else. ADRs today, we've got a few. Aussie, New Zealand. ADR hit to the upside. This is quite extended. Well, that's what I was going to do this morning, wasn't it? I was going to test that set file from Danny for the position trader EA. Somebody posted one yesterday, a variation on the daily RSI extension one. I might do that in a sec. So yeah, Aussie dollar, New Zealand dollar. Obviously, we're on a big down drop on this at the moment. We've had all sorts of weakness in commodities. So these two a bit tricky. Aussie, New Zealand is always very tricky. I mean, from an ADR reversal, obviously they're usually short-term plays, but for me, I'd like to see it get up to there. That's where I'd be more interested in shorting it. But if you're going to get in on this, it is extended. There is a good chance it will pull back from here, but it's kind of a scalp. So there is one. We've also got the all of the other basically New Zealand. So pound New Zealand extended to the upside. It's very, very weak New Zealand dollar move off the back of the Australian numbers. New Zealand dollar CAD ADR hit to the downside. New Zealand dollar Swiss ADR hit to the downside, and New Zealand US. So all of these opportunities for longs. Obviously just drop down low time frames. These are scalp opportunities. So you're looking for some kind of signal to get in. The 4-bar reversal gone in there, look. 2 pauses and a push up. But we've hit some resistance. So these lows, this is a great, if you want a really super tight stop loss based strategy, after you get a reversal and you retest, if you get anywhere near the lows, just assume we are either going to just take those lows out or double bottom them. Super, super tight stop loss based, you know, that's where you get your 10 Rs from, those types of trades, but you'll get stopped out on them a lot. But at ADR, obviously, if you see signs at ADR of the market struggling, those, when they do work out, they're the ones that you can scalp very good money out of. That's also a weekly look. Double weekly, actually. So is that part of a fib? That's a fib line, isn't it? It's a fib extension from another chart, look. Anyway, so that is a weekly, monthly high look as well. So that's last month's high, 3-week high, which is where we are right now. So if that is going to hold, and this is going to actually be a breakout, which has already been tested once. This is the second test. If it holds a second time, there's a good chance that might go. But US dollar strength at the minute, potentially today. So be careful. Just be careful with anything short-term intraday. When you've got so much news coming out, we've got 7 minutes until the Swiss franc announcement. Anything like this, obviously you get run over very, very fast in news. So just be a little careful with these. We've got a nice extension on the weekly. It is Thursday. That's yesterday, look. So that was the 125 ADR yesterday. You wouldn't have got into that because it was overnight. So you couldn't really have taken that one. There's a couple of other weeklies to look at, which could be first entries as well. Aussie dollar Swiss extended to the downside. So we've got a double bottom going in potentially at this propulsion. It's actually more than a double. It's multiple bottoms. Nice rejection going in. That's a good looking long opportunity, Aussie Swiss, and that is a weekly weekly range extension. So it's just hit 100% of its weekly range on average. Lovely propulsion gap targets to the upside. There is no downside propulsion gaps, only upside. However, if you're going to take this, bear in mind in 6 minutes the interest rate announcement's out. So if you buy this now and the Swiss drop the interest rates to 0 instead of 0.25, you'll be up here in about 20 minutes. So opportunity, but obviously bear in mind your stop loss also will not get honored. So if you get in long here and you decide to put a stop loss there and it drops, you may well get stopped out down here, not here. Yeah, news trading, incredibly dangerous with any broker. There's no broker that's not going to slip the crap out of your news and take as much money as it possibly can. That's their job. Swiss yen is also extended. Again, we've had that. That's already played out. And the same with the New Zealand dollar Swiss. I think that is all set up, actually. Where are we? Yeah, so weekly range. We are at the weekly range now on that one as well. But again, Swiss franc, in 5 minutes' time, it's going to be somewhere else, isn't it? So RSI extensions, again, Aussie dollar yen, hourly RSI extension on that one. Good opportunity to start a long position. So nice support. If market structure is going to hold on this, that is your entry for the longs. And obviously it's the cheapest thing to do is to long this at the moment. So good looking opportunity there for first entries long if you're trading the yens. We've also got the New Zealand dollar yen. Aussie yen, New Zealand yen is the same thing. So just take one or the other, otherwise you're double exposed. This is also in a good level for a bounce. We've got a backup down there, which is roughly third of an ADR away. So again, not a bad looking level. You've got a backup there. That's going to be a bit too close to get into a second, but somewhere down here would also make that still valid market structure long. So that's not a bad opportunity for an entry there. We've obviously had the short there. We've also got the euro yen and euro Swiss. I mean, euro Swiss can't really take that. I'm already long on that anyway. Took a long on that one yesterday on that RSI extension. So see where that goes today. And euro yen also extended on the hourly to the downside. Again, if market structure is going to hold, this is a great level for a pullback long. It's around about 61.8 retracement. Although we have got this very large propulsion move on all these euro pairs, which is still a question mark as to whether or not they are going to get filled. So I'm kind of hoping they do fill them, because obviously I've got shorts at the moment on these pairs. So, and obviously anybody that didn't get out like I did will also be wanting these down. So we will see. But yeah, we'll watch what happens with the Swiss franc. Might as well just watch the US dollar Swiss, I guess. And we'll see where that Swissy goes. See which way it takes off. I want long, basically. I want weak Swiss franc. Anybody got anything else they want to discuss this morning? I haven't, as I said, I didn't manage to get that poll out. I've been trying to think about what to do in the poll. There's so many questions I've got to try and gauge what people's sort of where people's sort of knowledge gaps are. But if there's anything specific, do let me know. You know, if there's a way that you would like to have a course laid out, or anything, any information you can give me, basically, because I'm just trying to put something new together, basically. So obviously I got knowledge on pretty much everything in this industry over the years, so it's just a case of brain picking. So I know what's important, and I will obviously deliver that, but it's a case of if there's anything else specific that you think you'd like to know about, and I know about it, obviously. If I don't, then I can't. Then let me know. Right, we've got 2 minutes to the news. Let's just quickly see what the indices are up to. So hedged on the DAX, long on the FTSE. 30-minute break's going to go in on the DAX. So where are we? 5, 10, 15, 20, 25, 30. So this is going to be a really tricky, this is going to be a good test of the EA, actually, because we're about to get a 30-minute range go in exactly as the news is released. So it'd be interesting to see if the EA gets this trade on today, if it actually is the right range. What is that? 8882. Yeah. So we will. Yeah, we'll just about take one on that. This will be an interesting test, this. I have some calculation trouble on the zone trader. When I make manual... no, there's no 30-minute range. Gutted. When I make manual DD control, it kind of starts with the lowest lot size. But I can't find out in which cases this happens at the moment. Pass. I'd need some more information, basically. Yeah, if you make manual drawdown control, I don't know how it would affect it. I mean, EAs are dumb instruments, basically. The EA is designed to take trades at levels. The lot multiplication works on the last trade taken. If you take a new trade, so basically if you do drawdown control, if you close a trade out partially, what MT4 does is it creates a new order number, a brand new trade, which is the latest trade taken with a smaller lot size. So partial drawdown, it's never designed, the zone trader EA is not designed for you to be mucking about. It's designed to just basically allow you to place zones and trade from zone to zone. It's designed to get in on the zones. It's designed to get out on the zones. If you muck about with it, it's going to do different things. And that's the same with any EA. EAs have logic. I can't make the EA logic for every single instance of every use of every person. It's just not possible. So there are stuff that you will do to EAs, and I've done it in the past. I've gone and changed and mucked about with things and gone, that doesn't work. I will change the EA if that is something I do on a regular basis to make sure that it deals with that situation, but I can't deal with everybody's situation. So yeah, it might be a case of it won't do the. Because bear in mind, when you're developing systems and strategies, I'm doing something. So when I'm doing something in the tester, I'm doing something in the tester based on what I do. If someone does something differently, I'm not developing the product to do that, whatever they're doing. So there's stuff that obviously I can change and amend to deal with different situations that people may do. But the thing is, if you're the only person on the planet doing something and everybody else is not, I can't alter every product just for every individual. That's the difficulty. So it's got to be something that's regularly being done. And drawdown control obviously is something. But yeah, I don't know. You'd have to give me an exact instance of what you're doing, why you're doing it. And it might be a case of I say, well, don't do it that way, do it this way. And then there might be a better way to do what you're doing, or I can introduce a button to do what you're doing or something like that. So I just need data, information, basically. You can DM me or stick it in the group, and I can look at it. The DAX isn't moving, so let's see what the Swiss is doing. Oh, big long spike. Lovely. Weak Swiss franc. I was watching the DAX, not the Swissy. So what did we get? I guess we got 0.25. Yeah. So SMB 0.25, that is obviously weak Swiss. Negative interest rate move is negative currency. So let's see if the spike holds. Aussie dollar Swiss up. All Swiss will be up. Let's just see what impact it's having on the euro. Not a lot. Slight uptick in the euro. Euro Swiss up. Yeah, a little bit of an uptick in the euro and in the pound, obviously the Swiss. So yeah, big move on the Swissy. So obviously we'll have to wait and see what the SMB say about this. So we've got the press conference coming out at 9 o'clock. The press conference obviously will give forward guidance on to what their future plans are for the next interest rate cut, although they very rarely give us anything of interest or use. The press conference at the SMB is also very short, usually, and woolly, should we say. So they just don't give any information away. Their entire economy runs on banking, yeah? They don't want to give away their trade secrets on how they do it so well and make everybody so rich. So, this is why multi-billionaires have Swiss bank accounts. They don't want you to know why the money's there. They don't want you to know where it's going. It's all very hush-hush. So the SMB are very quiet about what they're doing. If you suddenly tell everybody in the world that your interest rates are going to drop to 0.25 in the next 6 months, every billionaire on the planet will pull their cash out. So, yeah, we don't get a lot of information. It's just the way they work. So we'll see what happens. But it is the press conference at 9. The likelihood is we won't get a lot out of it, but wait and see. So next 30 minutes, you could have a sustained rally, or we could have a complete undoing and be back to normal, or we might find something out which completely reverses it. But at the moment, it looks like it's doing what it should be, which is a weak Swiss franc move. But we'll see if it holds. So we're getting to the point now, if you look at the SMB rates, where we're back. I mean, negative rates are not the norm, obviously. This is COVID. Yeah. But the Swiss had negative rates pre-COVID, and they sustained negative rates pre-COVID until all of the rate increases started worldwide. So as you can see, they dragged themselves out of negative interest rates very, very fast. They are putting themselves back to as close to zero interest rate as they possibly can very, very fast. This is why this is a safe haven currency. Yeah, they are independent from NATO. They do not get involved in conflict and politics. They have very low interest rates, which means they have a very stable currency. And because they have low interest rates, it allows the Swiss National Bank to print money and manipulate the currency value at will, meaning that they have complete control over wealth creation, meaning that this is where all the money goes. So when you've got any kind of problem in the world, everybody pulls money out of risky assets like stocks and certain commodities, and they need to put it somewhere safe. And this is basically your piggy bank you pop it into, so you know it's not going to get hurt. It's not going to make you any money. It's not going to lose you any money. It's just going to sit there while you're figuring out what the hell to do next. Yeah. So World War III kicks off, Swiss franc through the roof. Yeah. That's basically the way that safe havens work. So this is why they keep their interest rates low, and they are always lower than everybody else on the planet because they want to maintain that status. So it's not surprising we've got the drop. They haven't ruled out negative interest rates. They don't want to use negative interest rates because obviously it is less attractive for monetary storage to have it dripping away, which is why the yen has always had that problem and the yen's gone like that. But as close to zero as possible. But they have to also control their inflation. And obviously inflation at the moment is a problem worldwide, even for the Swiss. So they don't normally have a problem with inflation. But they are also having a problem. So we'll see what happens with this today. It's not, it's a 50-50 shot as to whether we were going to get a quarter or a half. But we got the quarter, so we'll see what happens. Obviously, the market's a very different place now. So we'll see what happens today with this one. But yeah, I don't see any reason why we shouldn't see weakness in the Swiss now moving forward. The market hasn't really factored in, if you look at all the Swiss pairs, the market hasn't really factored in a weak Swiss franc at all. In the last 2 weeks, which is here, you would normally see in the 2 week run up to an interest rate decision, the market either piling into or piling out of the currency. They obviously make the move before the announcement, which is why we get the large spikes when it comes out as not expected. But we haven't seen any of that with the Swiss franc this time round. So it would make sense that they will now start the move on the Swissy. But, this is now the Trump show, isn't it? So is that what they're going to do now? I don't know what the banks are doing now. I don't think the banks know what they're doing now, to be honest. But how can you make a decision on anything? Yeah. If you were the analysts in banks get paid six figures. Yeah. A senior or a mid to senior analyst in a bank is going to be on 125k plus. Yeah. Their job is to use the bank's money to make money. So the analysts are specialists in fields. They know everything there is to know about every specific economy or instrument that they are in charge of. So they get paid the big bucks to say, go and buy the US dollar. Market makers, they're not just buying the US dollar, they're sticking trillions into the US dollar. So it's got to be the right decision. If you're an analyst in a bank now, I'd imagine you're crapping yourself, because every time you say something, there's someone over there in America that can say something else, which makes your analysis completely moot, and you have to start again. So where they spend most of their time keeping, an analyst's job basically is to keep their finger on the pulse. Where the pulse is changing every 5 minutes, it's a very difficult job. So they get paid very large bonuses as well. Yeah, you think traders make money, analysts make a lot. But for every analyst job, there's usually around about 1,000 people going for it. So it's one of those jobs where if you get it, you are the absolute cream of the crop. It's like a prop desk or an FX desk in a bank as well. Yeah, if you're not performing, there's 10 people behind you that are performing. Yeah, and the job of the bank is to make money. So if your desk is given 10 million and you're asked to bring back 15 and you bring back 12, the guy behind you just brought back 18, he gets your job. And it's the same as an analyst. You get it wrong a few times, someone else will go, I told you. And they'll go, he knows better than you. Off you go. It's a horrible industry. Horrible industry. I know people that worked in it and it's not fun. But it pays a lot of money, but you burn out really fast. There's an economist on YouTube, actually, a bald guy. who used to work in banking, and he does a lot of economic analysis now. Can't remember his name, but he's really, really good. And he worked in banking. He's really young. I think he's in his sort of like late 30s. He's retired because he's just had enough. It's not a nice thing to do. So yeah, if you want to push your kids into banking, don't expect them to be not doing cocaine and going to strip joints every night, because that really does happen. We could talk about what you are trading at the moment. Me, zone resting for the moment. What zone resting? SIH till ORBV3 released. Backtesting POS RSI on short time frame. M1, M5. Yeah. At the moment, I'm still in, obviously, a lot of here. Not a lot, but I've still got positions on in the position trader account. It's taken a lot of loss, but basically my focus has been on indices this last month a lot more, because they're moving, and I've been trading breakouts. So yeah, I mean, it's difficult. This is one of the problems with trading. It's a very difficult thing to sort of say, what are you doing? What am I trading? I'm trading everything. That's what I do. But you don't have a set thing that you do all the time when things are not doing well, if you see what I mean. It's a bit difficult to explain, but you diversify. So long break on the FTSE on the 30-minute. So yeah, I mean, I just take trades basically, and the way that I have always traded is very discretionary, but with a system. So I obviously trade RSI extensions. That's my main bread and butter position trading strategy. But I'm also taking stuff when I like the look of it. You know, and you know, you can see my positioning on here is not normal, because this market's not normal. Yeah, and this is the difficult thing to explain. That's what I tried to explain yesterday. Look at my sizing and positioning here. That is far from ideal, but it's also potentially going to get back all of my losses that I've made over the last 4 weeks. And I have a feeling, is all I can say, about the way that this move has happened and what I expect to happen next. So I'm in heavy, large. This isn't something you can simulate. This isn't something you can teach. This isn't something you can backtest. This is a feeling after seeing this market move for 18 years, what's coming next. If it's wrong, it's going to cost me a lot of money. If it's right, it's going to recoup all of my losses. It's trading, but it's not a system or a strategy. It's just what I think is going on at the moment. I had a feeling it was going to be a nutty time with Trump. It's been nuttier than normal, so I've gone over to a system where I press a button and hold it, which is this. Yeah, get in, hold it. If it's going to go nuts, let it. Go with it. Don't stop. Just keep going and make massive money when you can, and take high risk. I will stop doing that when I've got myself recovered back to where I need to be, and then I will go back to normal. And my normal for Trump administration is going to be diversified, very diversified. So I'm putting a lot of research into stop loss strategy at the moment. I've got a lot of back tests running constantly on breakout strategy at the moment, which is what I've been developing here. And this is a very rushed version of something, but just to move to something that is going to work in this current market. This thing's going to calm down. This is the thing that's really difficult to know at the moment, because what happens always when you get a change of administration in any country. We've just had it in the UK with Starmer taking over, Labour getting in from Conservative. So it's not just a shift in the person running the country, it's a shift in the government. It's a shift in view on how things should be done. There's a lot of reform happening in the UK. There's a lot of reform happening in the US. There's a stance change in the US at the moment, yeah, where, you know, it doesn't seem to be just a person saying this is what we're going to do now. The rich have grouped together and become Nazis. Yeah, that's not just a change in government. That's a change in stance from a country, the biggest country, the world's currency country. So everything is going to change. And when you have uncertainty, the only thing you know for sure when there is fear, which is why we have the fear and greed meter, is when there's fear, you increase volatility. The best way to make money in an increased volatile market is to take risky trades and hold them. Bitcoin. Buy Bitcoin, pop. You make yourself $1 million. That's what you do in this type of market, because it's going to go nuts very often. And there won't be a reason for it. And you won't be able to determine a reason for it, because it's just mass fear and greed. It's banks and institutions adjusting portfolios based on what their analysts are telling them, but also what their overall exposure is. Yeah. So a shift in exposure will change how a market operates. And by market, I mean a commodity market, a stock market, or an FX market, not individual currencies and symbols within those markets. Sectors will change. Yeah. As we have Tesla collapsing, we've got new electric car manufacturers going to take dominance. BYD probably going to be the biggest, which means that China is going to have an economic boost, which is going to destroy the dollar. Yeah, so there's a world shift happening at the moment, but you don't need to know what's going to happen in the future. You need to know that what's going to happen is ADRs are going to increase. I've talked about this a lot before, and I always use it as my example, because the easiest example to give of what we are, I think, going into now is the pound New Zealand ADR, which is currently trading at 166. I've said it before COVID, I was trading this at 450. Yeah. So the volatility before COVID, and I'm going back 5 years before COVID. Yeah. So going back a decade. Yeah. This thing was trading at twice the volume than it is now, more than twice the volume, almost 3 times the volume. Yeah. Or 3 times the volatility. In those days, if on the pound New Zealand you pressed the buy button at the open and it actually was a bull day, you made an absolute fortune. But you used high risk because the ability to make money was easy, because it was volatile, which means you had a lot of fast moves, and the fast moves were sustained, which means that when you got in, it didn't come back and stop you out all the time. In a low volatile market, you get a lot of this, which means you go long, you move to break even, you stop out. You go long, you move to break even, you stop out. In a high volatility market, you go long, you move to break even, and it just takes off for 15 minutes. And then you're like, well, I'll lock some of that in, and it doesn't come back. That's the type of thing you have to adjust to. Position trading is still viable, but what you're going to find is you're going to need to space yourself further apart with lower risk to survive what may come, which is bigger squeezes. Yeah. Zone trading. Yeah. You're going to need to go out onto the instead of the hourly timeframes, you're going to need to go out into the 4-hour timeframes. You need to slow everything down in high volatile markets if you're holding long term, and you need to speed everything up on low timeframes in volatile markets, because you're going to make money faster. Yeah. They're all going to work, but they're all going to be look at the size of this move. Look at the size of that and that, that and that, that and that, that, and then that and that. That's one trade. 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 1, 2, 3, 4, maybe 5 trades. We've just had one since September. Yeah. In the whole of last year, we had 4 swings. Yeah. Volatility makes swings longer, stronger, and faster in the speed that they move, and longer to play out. On low time frames, the moves happen at a bigger sort of noise or volume, if you like, which means that when you get in, you make more immediately, which means if you use high risk, when you get into them, you'll get a further distance, which means your rewards become higher. And again, this is why we use ADR. We trade the same way, but what we do is we adjust our strategy based on the average movements. If you increase your risk in a high ADR environment, you'll make more money faster. But you don't know when to do it. And this is the thing that I've always, you can't, there's no answer to it. You can't fix it. But it's something I've always struggled with, and everybody always struggles with, is when do you do this move? You do it, you try it, and if it holds, you keep doing it until it stops working. It's adapting to the market conditions. But you can't tell when we're going to go back to the previous market conditions. If you look at the S&P 500 as an example, everybody on the S&P 500 was when we had the bear market start back here, everybody was still buying the dips here until they were like, hang on a minute, we've gone down for 2 months. We've not gone down for 2 months before. What's going on? It's not until that point there that you adjust. And then you go, all right, well, we don't buy the S&P anymore. We sell it. And you keep selling it as long as the S&P keeps working while you're selling it. It takes a couple of months for it to adjust back before you go, hang on a minute, I'm not making money again. I need to readjust myself. We're now in a bull volatile market. And you stay in that until we get into a bear market, and they're still buying the dips now. And they will be buying the dips until that happens, and they'll be going, hang on a minute. And then they'll adjust to that market regime. So what I'm doing at the moment is adjusting, which is chaotic, because it's a dip your toe in the water in everything method, again, until you find this is really working well, and you stick with that. So there's no obvious answer to that question, really, as to what you're doing, because you do what works, and what works changes. When it changes back, you do the other thing. But to survive consistently, you diversify, which means at the moment what I'm doing is taking a lot of breakout trades, because I'm seeing the breakouts just go crazy and make lots of money. So it means I'm having big swings in P&L, but the swings are big. 10 grand days. Then I'm having 10 grand down days, but I'm having more 10 grand up days. If I reduce the risk down to $500, I'll be having $500 up days and $500 down days. So all I've really done over the last sort of few weeks is I've massively increased my risk, because I've made a big loss. If I'm making a big loss, it means there's been a big move. If there's a big move to be had, I'm going to put some big risk on to try and recoup the big loss, because the big loss happened because I was sized incorrectly for the movement. So it's just an adjustment process. But diversification is really, I said it last year, that's what I want to do this year, and it's what I am doing this year. So this is why I've been putting so much time into the ORB at EA and development and strategy testing and permutation testing of that, to get that really fine-tuned to something that I can say I'm really happy to let that run on autopilot, because I know it's going to adjust to any market condition, and it's not going to work all the time. It is going to have down months, but when it's having up months, it's going to have good ones. Yeah, I'm looking at breakout strategy for the months where things go mad. They will kill it. But I'm also looking at mean reversion strategy with stops to couple with that breakout strategy that uses stops. So if you use a strategy with the same R and the same risk profile, i.e. it uses a trailing stop at a percentage of ADR, and you do that in both directions by having a breakout version and a mean reversion of the same risk profile, i.e. the same risk reward, the same amount of risk, the same loss recovery strategy, and the same trailing strategy, what will happen is you will always have one of the trades making you money. DAX is collapsing. Looks like we've got a euro push going on. So, you know, if you take a breakout here and that works, you're in the money. At that point, you'll be looking to mean revert it. If it carries on, you make twice as much money and you lose 1R on the mean reversion, but you've made 3R on the break. So coupling a mean reversion and a breakout strategy together in the same portfolio means that the equity curve is consistently going up, but you're constantly making losses, which keeps the equity curve contracted, but it's safe. Yeah. If you just mean revert and something goes parabolic, as probably a lot of people have learned in the last few weeks, you haven't got any way of making revenue on that break. And this is the problem at the minute. Nobody on the planet can tell me what's going to happen in the future. The Fed cannot tell us what's going to happen in the future. Trump doesn't know what decision he's going to make tomorrow. We don't know if Putin's going to want to start World War III. We don't know if NATO is going to get dragged into it. We don't know if the UK is going to get dragged into it. We don't know if increasing spending for 5 years on defence is fast enough, because we might have World War III in 3 years' time and we're not ready. Yeah, there's a hell of a lot going on at the minute, which means that the markets are unstable, and instability equals volatility. So you've got to be able to adapt to take advantage of it. And that's what all of my downtime at the moment, which is why I'm a little bit unprepared for everything at the minute. All my downtime at the moment is being put into system permutation testing. I've dragged a load of old systems out of the gutter that I had half developed, which showed promise that I didn't have time to continue with, and I've been they're running now over here and over there actually on my VPS, just running permutation tests to just find stuff. My goal when I run a permutation test on anything is to find stuff that has a bell curve where we have a minimum of 60% results positive within the bell curve. Anything out here, yeah, okay, it would be absolutely lovely if we got it, and it would be awful if we got it, but the odds of these happening is minimal. The odds of something in the middle of the bell curve of the test happening in the future is high. So it's about coupling strategies together that have this equity curve that isn't big, but it isn't small, but it's consistent. So if I test something and I get it's like with the ORB strategy, the testing on that folded on. You know, all these tests that I've been performing on the ORB, you know, the Nasdaq, we got these huge risk rewards, return on drawdowns of 17. Yeah, so a bell curve in this case runs from 17 over there all the way down to minus 0.91. Yeah, so this is your super return on drawdown, yeah, which is the outlying 90% sure these are flukes. Out of sample test them over different time periods, and if we get a similar result, maybe they're not flukes. So run it. But these really bad results, they are either because they all share something the same, which in this case is high lot multiplication. Yeah. So using martingale, yeah, loses. Who'd have thought that? Right. So it's just confirming the fact that everything down in this end of the bell curve, which is the losing end, is using martingale. So it's a case of, well, we don't use martingale. So let's remove martingale from the results and see what the bell curve changes to. And this is basically what I do, is just look for stuff that is more likely to generate profit, and then look at the extremes of that. Right, so then the extremes of that now going down to negative 0.34. We were negative 0.9. So now I'm looking at the bell curve of results here, which I've now only got 324 results. So I've got rid of everything that is martingale, everything that's gambling, basically. Yeah, I've got 324 results there. Of those 324, we have 300 positive return on drawdowns, which means that there was 24 in that bell curve now. My bell curve now looks like this. Yeah, there's 24 results that produce a negative return. There's 300 that are within the bell curve. There are no outliers at the top. They all make money. So we've now got something that is robust. We should be able to pick any one of these, stick it on any other time frame out of sample, and it should return a result. If it returns a result above 0, it's robust. Yeah, and this is basically what I'm doing. And this is what I've been doing with the ORBV, you know, the new version basically, is just testing it to death and making sure that all the permutations that are positive are not flukes. And some of these up here, these massive numbers, yeah, are using martingale. 1.2, 2, 1.8, 1.6, 2, 1.4. That's really the max I would ever consider going to, and that's risky, yeah. But we've got 1.2s in there as a recovery factor. That is livable, yeah. So I've looked at all the 1.2s and what we get with those, and we're still getting 11.85 return on drawdown, which means if I stick 10 grand in the bank, I'll have 110 grand in a year. Yeah, but worst case scenario, I'll have 1.71 return on drawdown. So the worst case scenario is I'll have 27 grand in the bank at the end of the year if it all goes to shit. That's robust. I'm happy with that. And it doesn't matter what size range I use. It doesn't matter what the maximum lot size I set is. It doesn't matter whether I use a 10 or a 20% ADR stop. It doesn't matter what size trailing stop I use. And it doesn't matter if I take a partial or not. It will all work out well, the whole lot. Yeah. If I don't use martingale, which obviously we don't, so it's not a problem. But that's what I'm doing with the other strategies that I've got running at the moment, is this level of system parameter permutation tests, you know, not just testing 200 or 300 variations, testing thousands of variations and making sure it all works. You couple two completely opposite strategies together with this level of detail using stop losses, and they cancel each other out. But the difficulty is they have to share the same risk parameters. So I'm using ADR. So the other strategies also have to use ADR. They have to risk the same amount of money over the same percentage distance at the same time in history to make them work together as a pair. They also have to use a trailing stop or not use a trailing stop, because when one is going, the other one will be coming back. Yeah, and they have to come and go with the same risk parameters strapped around them. Yeah, if you think all the market does is do that. Yeah, so when it's doing that, I have to have a parameter that runs with the market. When it comes back down, I have to have the same parameter running with the market, because if I have a different one which is twice as big, the danger is this one will get stopped out and this one will also get stopped out, meaning that you have a double negative. The idea is to have one working while the other one isn't. You shouldn't have, you can, it's difficult, but it's quite difficult to get, you know, the top, get out, get in, and then ride that back down again. Because one of them will have a parameter that will stop you out, because the other one is going the other way. You see what I mean? Yes, it's a buy and a sell. When it goes like this, yeah, the mean reversion strategy will not lose money. The breakout strategy will. So you have a pause, a stagnation in the equity curve, because this one is probably paying for that one, kind of. Yeah, it doesn't, you need to get a 2R, but it doesn't work that way. But everything I'm doing has at least a 3R, meaning that you've got a 1R variance. So if you go up by 3 and you come down by 3 and you have a 1R risk on both, you are left with 1R in the middle, and it doesn't matter which of them works, it produces 1R. If you can produce 1R every time you get in or out of the market, it becomes a game of how many times can you get in and out of the market. You drop down to 5-minute time frames, you can get in and out of the market multiple times a day. meaning you can return 1R multiple times a day. So it's about going down time frames, using that volatility to extract money while it's there. When the market calms down and goes quiet, we start position trading, and well, I'll keep position trading, but we can adjust the position trading to go with those swings, because the swings will be like that. Normal. But that's not what we got, is it, at the minute? This is the thing. It's a very hard market. It's the hardest market I think I've ever traded through at the minute. It's just an absolute crap show. Unexpected, I think, for many people, because they weren't expecting him to do what he's done. You know, the guy's come in and he's completely flipped the market on its head, which is, you know, if there's like I said yesterday, if there's a master plan, you need to get it executed fast, mate, because your country's going down the pan and you're taking the world with it. Unfortunately, in the UK and Europe, we become the US in 6 months. So there's roughly a 6 to 12 month delay between what happens in the US and what happens to us. If you look at historical interest rates and things, when the US and everybody's got neutral interest rates, when the US starts to creep its interest rates up, 6 to 12 months later, the euro and the pound start to increase interest rates. When the US freeze interest rates, we then 6 to 12 months later start to freeze interest rates. When they go into a recession, 6 to 12 months later, we go into a recession. When they're booming, we're booming. But there's this delay of 6 to 12 months. Trump's been in for a couple of months. The US is starting to go down the pan for the couple of months. The stock markets have collapsed for a month. Yeah. This is coming this way. And it always has and it always will, except we're not seeing him turn this back around. So this is where we've got this diversification happening in the world now. Europe have gone, right, you're not going to help us anymore? Screw you. We'll pay our own way. Yeah. So the reliance on the US and the following of the US for the euro specifically at the moment is not going to happen necessarily. Because if the US goes down the pan, Europe's going, we're not worried because we don't owe you any money. You're not helping us. You're not lending to us. We're not borrowing from you. We are independent. The Swiss, US can go down the pan as much as it likes or pump as much as it likes. The Swiss franc goes sideways because it's independent. We've had a complete separation between continents, US and Europe now, not doing the same thing together. So it's all changing. You know, like I said before, in 6 to 12 months' time, we could be trading the Chinese yuan as the main currency. We don't know, do we? BRICS is a thing. It's a real thing, and it's a real threat to the US. And he said, if BRICS starts to threaten the US, we will put 200% tariffs on them. Good luck. They are the dominant force. You can tax them as much as you like, but China do not need your cars. They do not need your electronics. They've got everything they need to carry on and supply the rest of the world without you. You will become a poor, desolate, like middle of Australia. New York will be like a wasteland because they won't have any money, will they? As long as they can generate their own stuff, that's fine. But good luck with your Canadian maple syrup. Have you any thoughts on publishing the breakout? Yes, potentially. Yeah. But, you know, this isn't something that's ready by a long shot. That's my next focus after I've got this opening range. When I've got the opening range breakout EA video done and everything up on the website and put to bed, I can stop focusing on it because it's taken the last sort of month of my life. I've been sucked into it. So I'll be able to put more time into the breakout strategy. But the trouble with it is, obviously, it really needs to be coupled with the mean reversion at the moment, because the yesterday was good. Did 3K yesterday. I'm up 400 this morning. We've got a couple of breaks on the go on the DAX. It's only the DAX. But noticeably yesterday took way less trades yesterday. There was a lot less trades taken yesterday because we had quite a quiet market. So this strategy really only operates well when the market is volatile. The danger obviously is, and this is always the way, it's that this is what a lot of people that start to sort of become gurus, if you like, or go, I've cracked this, I'm going to teach everybody. This is where they all fall foul. Nick Shawn is one of them. Yeah, Nick Shawn's had 4 different strategies in the last couple of years. Why? Because he's basically curve fit everything he does, and then the market changes and it doesn't work anymore. So he scraps it and starts something new that is working at the moment. People follow him and then go, that doesn't work anymore. Okay, tell you what, guys, this is working now. Yeah, of course it's something different's going to work when the market regime changes, because you haven't robustness tested. You basically curve fit to a market, the market changes and it doesn't work, and you're wondering why it's failed. Okay, let's reinvent myself and do something different. This is what a lot of these gurus out there do. And the problem is, a little bit like this strategy here, this is working at the moment. If I fine tune and went and spend months on this, and then Trump goes, do you know what, we're not doing tariffs anymore, Ukraine is sorted out, and looks like the economic outlook for the world is all starting to go up again, this strategy is not going to perform. Yeah, it needs to be implemented in the right market regime, which is a bull volatile market, which is what we've kind of, well, it's not, it doesn't matter, bear volatile, bull volatile, just volatile is the key word there. So I need to put into place more research into filtering for it. So at the moment it's got ADR and volume based filtering, which will work all of the time, but there will be a lot of false trades taken on news releases with this. However, it also makes a lot of money on news releases. Why did that not trade? Interesting. Thought that would have traded. What's got a Swiss? Give me 1 sec. Aussie dollar Swiss. That's too big. All right. Okay. So that moves too big. You know. So he's got. Sorry, I just wanted to know why that wasn't trading, because I visually I'm looking at it going, whoa, that should have taken the trade out. That's a like the Bollinger Band contraction breakout type thing. Didn't work because it's too much movement. That was because of news, which is exactly what I was just saying. This will struggle and start to trade all news releases when the market is calm, and news trading doesn't work. So I've got to be a bit careful with putting some filtering in place that will kind of take into account when the market regime has changed. So in a calm market, it will struggle. But again, I've got to test all of this, and this is all part of what I spend my entire life doing, is testing stuff. My job is testing. Yeah, trading is all trading is at the end of the day is coming up with a set of market conditions that provide an edge, which creates alpha profit. And the job is statistical analysis at the end of the day, and learning and understanding and putting together criteria to test. And 99% of everything you test goes in the bin. I have thousands of EAs which are in the bin. Yeah, I've got a handful of EAs which are on the shelf, and that is one of them, because they have an edge, but the edge isn't quite there, if you see what I mean. It needs more work, but it's a time thing. I said to my wife, she said, because I was talking about what was going on with the euro spike and the money, and what's, you know, I've lost money in this month. And she said, well, can't you just invent another one? because that's what she thinks I do. I invent strategies. I invent robots. I said it's not as simple as that. Every time I launch a new product, that product is the EA, if you like, or the strategy, is the outcome of 3 to 6 months of research, investigation, testing, coding, bug fixing. This is what the job is. It's basically batting your head against a brick wall 100 times until the one time that brick comes out and you go, there it is. And then you need to work on that brick for a few weeks to a month. Yeah. And people, like I am in the live room and people saying, is it ready yet? Is it ready yet? Is it ready yet? Is it ready yet? When's ORB3 coming out? When's ORB3 coming out? Literally every day I'm like, the manual takes me a day. The video takes me 2 days. Yeah. And as soon as there's a bug, there's half a day gone. I'm doing 2 live streams a day, blah, blah, blah. That's what this is, this job. It's not sitting here and going, I'm just going to let this make me money. And that's what everybody wants. Sit on a beach, drink a Mai Tai, get rich. Yeah, it takes a lot of years of practice to get rich. And I'm not rich. We have Trump for another 4 years, so we have plenty of times like this ahead. Yeah, so the trouble is with that is this is early Trump, right? Early Trump is coming in, beating chest, making lots of decisions, breaking stuff. Trump in 6 to 12 months' time will be controversial, still making changes to stuff because he's broken things. But it won't be this, it's not like he's come in and he's sat down. The first thing he's doing is get a load of pens and write a load of stuff and go, I've just changed this. I've just changed this. You guys don't like you. I'm going to put 25% tariffs on you. It'll all calm down. And we will all return to the norm. But there's always something happening. We have a pandemic in the middle of it. We have another war kick off. Something else happens over there. There's a massive earthquake here. There's always something that's going to upset the markets and turn into fear. And this is what markets are. They are a movement of financial wealth, if you like, from asset to asset, from currency to currency, commodity to commodity, from stock market to Swiss franc, from stock market to oil, from oil to corn, from corn into Australian dollar, from sheep into New Zealand dollar. Yeah, that's all markets are. They're a binary transaction of 2 things. Yeah, either money into purchasing stuff or money converting from A to B. Yeah, that will always change. It's about finding the volatility within the market. That's what your job is to hunt down what's working at the moment. And that changes all the time. But there is only, like I say, 3 things the market can do. Yeah, the market is either in a range bound mode. It's either breaking out and attempting to trade into a trend or failing to trade into a trend, which means it returns to this state. This is mean reversion. This is mean reversion. This is trend. That is your focus, mean reversion trading, because mean reversion trading happens 70 to 80% of the time. Trend trading happens 20 to 30% of the time. Because the market will fail to break out, which becomes a mean reversion. It will not go anywhere, which becomes a mean reversion. So if you have a breakout strategy coupled with a mean reversion strategy, 80% of the time, one of those 2 will be generating alpha. But the back testing is the important part, the robustness testing, finding the instruments to trade it on. Yeah. So again, you stick this breakout strategy on certain instruments. It's awful, absolutely terrible. You stick it on some instruments, it's unbelievable. The robustness testing that I've done, the NASDAQ is head and shoulders twice as much profit as all of the other indexes put together. Doesn't mean you shouldn't trade the other indexes, but you should expect the NASDAQ to be your bread and butter. If the NASDAQ changes, because what they do is they reduce the NASDAQ stocks to 50 instead of 100, the NASDAQ is going to change. The regime, the movement style of the NASDAQ will change, and the strategy you have won't work anymore. You've got to adapt, which means you've got to do what? Back to the research. I've now got to start a new strategy development cycle, which is going to take me 3 to 6 months to build, robustness test, develop, produce, live test. Yeah, it's a big, long-winded thing doing what I do. The rest are sheep. you guys. But you're not. I mean, I don't know what you guys do, whether you do your own research analysis or what, but 90% of traders are sheep. Yeah. Hey, that guy's got a P&L with profit on it. What's he do? He trades. Well, how's he trade? This is what everybody wants to know. How do you do it? Well, I just do it. And then they do what you do, and all of a sudden you start losing money, and they're like, well, he's lost the edge. Yeah, he's lost it. He used to be good. He's not anymore. No, the market's just changed. But you're not going to hang around while I wait through this downtime for the market to come back to my system's edge. And that's all that's happening at the minute. We've got a change in edge. Different edges are going to play out now. Hard work. I thought really short time frame was also diversification, but it's picking up pennies in front of the steamroller. Short time frame is the same as big time frame. It's just more opportunity. Yeah. So the same things. If you look at the market reversal alerts indicator, right? We've got 2 reversal alerts on this chart. Go down to the 1 minute chart. Scroll out. You haven't got any on that one. Go down to the 5 minute chart. You've got reversal alert up there. Yeah. The same thing plays out. Market structure shift happens on all time frames. Yeah. But on a 5 minute chart, you will get, I mean, this is quite a big, strong move today, but on a normal chart, you'll get however many reversal alerts a day on the 5 minute time frame. On the hourly time frame, you'll get 1, 2 a week if everything's moving in an orderly fashion. So all you're doing by dropping down to time frame is you're creating more opportunities because you have more candlesticks painted within time. Yeah, a time frame is a representation of price over time. It's a candlestick drawn over a period. If your period is a daily chart, you have 1 candlestick. On a 5 minute time frame, you have 1 candlestick. If your strategy is every time a candlestick closes to sell, yeah, on a 1 hour chart, you've got 24 opportunities to sell a day. On a daily chart, you have 1 opportunity to sell. On a 5 minute chart, you have a lot more opportunities to sell, and I can't do the maths. I'm going to quickly calculate it. You have 324 opportunities to sell on a 5 minute chart. Yeah. You have 324 opportunities to lose on a 5 minute chart. You have 24 opportunities to lose on a hourly chart and 1 opportunity to lose on a daily chart. It's nothing different. Price moves up and down through time. When you look at a chart here, and then you look at a chart here, it's just more time gone past, but the movement up and down is the same. That's all it does. It goes up and it goes down, goes up and it goes down. Yeah. You go on to a lower time frame. I need to zoom out. Goes up and it goes down, goes up and it goes down, goes up and it goes down. Yeah. But the amount of opportunities here is that many up and downs in 7 days. On the daily chart, I've got that many up and downs in 7 years. So dropping time frame is less reliable, but more opportunity. That's the difference. That's all there is. When you've got something that's moving fast, all you do on a lower time frame is make more, quicker. If you limit your downside, which is why you've got to use stop losses on low time frames. Yeah, I mean, I'd never run a position trading strategy on a 5 minute time frame. Yeah, because that 1 reversal alert you take here, yeah, long, if that is the very first start of a 3-month drop, you're dead, right? Because there's no reason to hold that. If I go long here and just hold it, I could be holding it during that, and I got in here on a 5 minute reversal alert. You can't hold long-term positions by entering on 5 minute time frames. When we trade H1M5, we're trading the hourly RSI swings. So by the time we get in, it's already swung for days before we enter. Yeah. On a 5 minute chart, if you take an RSI extension to the downside, you'll get multiple a day. US dollar is on the move by those things. So is the Canadian. 5 minute time frame. Yeah. in one day, you've got 2 RSI extensions. And then next day you had an RSI. The day before that, you had 3 RSI extensions. The day before that, you had 3 RSI extensions. Upside, you had another one. Not quite. Did there twice. You've already had 2 RSI extensions to the upside today to go short. Yeah, that's the difference. You're going to get killed down here using fast instruments, but equally, when you take a breakout here and go short, if it moves down by half an ADR or a quarter of an ADR and you stick a break-even stop on it and you hold it, you could hold that for a week. And if it does that, 3 days later, you're sitting on, I don't know how many R's. Let's say you put a stop of 42 on it. You're looking at 360. It's a big R, isn't it? Yeah. And that's what I do here. All of these trades have a minimum risk reward of 4R. So the worst case scenario, if I get 4 trades go back and break and don't work, the 5th one gets them all back. Yeah. I need two or three trades to break in the same direction at the same time. I'm done for the day. But you've got to be able to create opportunity. But it's about creating opportunity with a very high return on drawdown, yeah, which is where your testing comes in. So I know that it's best on those instruments to use those instruments for diversification intraday. So if one goes that way, another one goes the other way, I will get one of them. And also to use a loss recovery system so that if the market conditions are wrong, I'm going to need to use more risk to recover my losses, which is kind of what ORB does. Yeah. So it's you know, this is what it is. This is this job. It's not about going, oh, right, when the RSI gets above this level, you wait for a 3 candlestick pattern to do this, and then you place a risk above here, but don't put it there, put it 4 pips beyond it because the testing says that 2 pips. This is what everyone's looking for. How do I trade? Give me an exact set of rules on what to do every day so I can just give up my job and sit in a desk and wait for the exact set of rules to go ping and draw an arrow on the chart. Trump comes in, none of it works. Ukraine war starts, none of it works. I'm excellent at trading oil. Ukraine war starts, you're dead. Yeah, it's just, you know, this is diversification. Trading is about buying and selling stuff. Yeah, if you went and got a job in a market, you bought a market stall, you started selling fruit and veg. Yeah, and all of a sudden then Tesco's Express opens up 3 stalls along and sells all the fruit and veg at half the price. You ain't going to sell any fruit and veg anymore. So what do? Diversify. Start selling books. Bookshop opens over here and you go, ah, crap, can't sell fruit and veg, can't sell books. What do you start selling? iPhones. Yeah. Apple opens a store behind you, you start selling Android. Diversification, change. Nothing stays the same. Trading, no market stays the same. New Zealand pound was trading at 300, 450 ADR 5-6 years ago. It's now trading at 166. You can't trade the same thing in the same way. Change. That's what the life is in the trading world. How are you trading breakouts? So basically, I covered this all on Tuesday. Covered it on Tuesday. Go and watch that. But basically, it's just waiting for expansion, price expansion. So very similar to the opening range breakout strategy. In that, it's having a bad run at the moment. In that we are waiting for the market to move. So it's basically, I've created an EA that monitors the market conditions, waits for volume and distance to form, and then it takes breaks of those levels within a time period. If the time period is expired, it removes them. So I'm not going to go into the exact details in detail of the strategy. This looks like the Canadian dollar's moving. A lot moving. Got strong US, obviously got a weak Swiss. New Zealand dollar's coming down. Canadian dollar is strong as well. A lot of movement today. Euro US coming down. Yeah, so basically it's just literally taking breakouts with very tight stops though. Yeah. This is the key with this. When you've got the other thing about high volatility is in a low volatility market, you're going to get an awful lot more movement like this. Yeah, a lot more wicks. Yeah, big wicks everywhere because there's volatility. There's low volatility, so you get a lot of up and down movement. Look at the Asian. Think Asian ranges. Yeah, calm markets, Asian ranges don't really go anywhere very much. So if you put a stop loss above the high, you're 99% sure you're going to get stopped out. Yeah, in a high volatile market, when it goes, you don't need a stop below the low. You have a stop not far away from where you get in, so that when you take the break, the risk reward is easily achievable within a short amount of time because the market is going very, very fast. Yeah. So think news breaks. So the stop loss strategy is basically based on ADR. So we use a percentage. Again, it's a little bit like the opening range breakout strategy. It's a similar principle because that's all ORB is. If you think about it, we know when the volume is coming. We know when the volatility is coming on the stock indices. In FX and commodities, we don't know when the volatility is coming. So at the moment, the volatility comes when someone dumps a large order because of the volatility created by what Trump's doing with the world economics at the moment. So you use tight stop losses and you basically take some off when you get 3 or 4 R above your stop loss, and then you hold the rest of it and you just let it run. And, you know, the days like this move we've got with the Swifts going on now, these are the breakouts you're going to make your money on. Yeah. When you get into these, yeah, you're already out within 5 or 10 minutes. Most of the trades that I take are very, very fast. You know, they're super, super quick entries. I don't know, I haven't got times on them, but you know, you're in and out usually within half an hour. You know, and this is the thing with this type of strategy. It's the same as ORB. You know, a couple of good breaks, I'm done by mid-morning. There's no more trading needed. It's basically you're out. Same with the ORB. Look, we're breaking short now on the FTSE. I mean, this one might take a bit longer, but because this is not the greatest entry in the world, is it? This is quite possibly the worst entry in the world. But, you know, this is the strategy. I've tested it. This is what works. That is obviously not the best place in the world to take a short position. That is the best place in the world to take 75% of that off. But if it then pulls back and carries on to ADR, because the pound, this is the FTSE obviously, we got pound interest rate coming out later. If that wants to collapse 200 ADR today, I'm going with it, but only with 25% of my position. That's a terrible entry. But this is the thing with backtesting, yeah? Every bone in my body as a trader says, why are you doing that? That's ridiculous. You're buying a double bottom bounce. There's liquidity here. They're buying it. Look, they bought it. They bought it again and put a new high in. Why are you buying it here? Testing shows that is a good thing to do. Go with the flow. I'm not going to argue with the backtest. The backtest says that works. 30-minute range does work. I've got a part in the video about TPOs. So there's a bit in the video which explains, it's this slide here, explains about the TPO. And basically what we're trading here is the 30-minute TPO, which is that. Yeah. So this is the first 30-minute candle, initial balance high and low. Yeah. And look what often happens. That's the rest of the day. And that is your 30-minute ORB. That is the 30-minute ORB kind of there. These aren't actually with the right TPOs, but you know, that's your upside, that's your downside. So when you put your 30-minute in, yeah, if it breaks short and comes back and stops you out, the likelihood is the break long is going to be the one that works from the 30. There's your initial balance there. This is a double. This is a balance day, rotational day. So both breaks had an opportunity to work that day off of the 30-minute. Yeah, that is assuming that you don't get in on the 5-minute ORB, which is there, and that is your 5, your 10, or your 15 ORB. If the 5, 10, 15 is like this, the 30 is likely to be the base point for the day to go from. Did I draw that where you could see it? I know, I've just drawn a load of stuff off the top of the chart. Sort of, but yeah, you get what I mean. But that's all in the video. You'll get it. Lower time frames will have smaller target fractions of ADR rather than multiples. Yeah, everything works within ADR. Yeah, so it's all about, everything I do is, as you know, is all about and based on ADR. So if you've got something that moves 100 every day, you use a fraction of that 100 as a stop loss and a take profit, because it's dynamic. And as this, like with the pound New Zealand, we were trading 450 ADR. Now we're trading 166 ADR. When you're trading a percentage of ADR, back then I was trading 45 pip stops. Now I'm trading 16 pip stops, but I don't have to do anything, worry about it, calculate it. It's a percentage of what the thing's moving at. If something's moving like this, our risk is small amounts of movement. If something's moving like this, our risk is large amounts of movement. Percentage ADR. It's the only way you can be dynamic with an instrument. You can't use fixed pips on anything. If anybody uses fixed pips in any strategy, they will die as soon as the market regime changes. As soon as you start to go big, their strategy, which uses 10 pip stop, will be literally half a candle. When they developed the strategy, it was at least 3 candles worth of movement. They're now being stopped out instantly, and they're going, why is this stopping me out all the time now? Didn't used to do that, because they don't understand that markets are not the same. They change. And that helps us to adapt, doesn't it? So low time frames at the moment, though, as you can see, yeah, I mean, I'm not on this because the Aussie dollar Swiss here, yeah, that is more than 20% of the average daily range, or more than 40%, I think. ADR is 56, so half an ADR is 28. That is 25. So that's more than 40% of the average daily range there. So not trading that. It's too much movement. And as you can see, what's happened was stalled out. Yeah, because testing shows that anything above 40% of an average daily range of movement creates exhaustion. Yeah, this is what the BAS testing shows. So that's what I go with, because you go with data. This is a data-driven data analysis job at the end of the day. You analyze data. Data says do this. You do this. It works. Data's right. You do it. It's wrong. There's something wrong with your data, which is why it's so important to have tick data, which is why I keep saying, you know, when we did all the early lessons on system parameter permutation and robustness testing, first thing, tick data. If you haven't got accurate data, the results that come out are going to be inaccurate. Yeah, it's GIGO in programming terms. Garbage in, garbage out. If you code something badly, you get a bad result. If you code something well, you get a good result. If you've got crap data, you get crap reliability. In this case, is what you get. Load of rubbish. Right, I'll leave it there. There we go. So we did manage to talk about something today, didn't we? Okay, DAX. We're at 5R already. Is it going to be one of those? I'm double hedged today, so I'm going to see if I can get out down here. This is my next project, by the way. As soon as I've got the ORB out, I'm going to be recoding this. It's not going to be much of a big job, actually, but just going to recode this so that when the aggressive drawdown controls are taken, or rather the aggressive exit attempts are taken, it's going to use a stop loss. Basically, it's an aggressive drawdown control exit. So because I've identified and I've been testing, and this is what I've been doing, is doing that method of exit, and it is so much more successful long term than the hold or re-hedge mechanism that I've been using or I've been manually employing. So I've got to test it first, but I'm going to be changing the SIH logic, and that will be an update as long as the marketplace allows me to update it. But it's just going to be another option to say, when you take the exits on this, do you want to use a hard stop? So what that does is it might well be death by 1,000 cuts. If something moves 200 ADR and you get out at 1 ADR, you're going to take 1 ADR a loss over and over and over again. Still going to hurt, but it's not going to hurt as much as not doing that, because there's a lot of times where you will get out. So when you get a 150 ADR, for example, well, this isn't even ADR today, but let's say, for example, we attempt an exit. So we get out the shorts here, we go long on bullish price action. What it will do is it will have a stop loss there. So instead of this thing going like this and potentially sitting at 150 ADR for the entire day, and then you taking a massive loss, what it will do is if it gets down to there and pulls back and then comes down to here, you get out on that. But if you fail the first time, you just are going to increase your loss from 200 to 400. And then when you get out on this one, you're going to aim to recover whatever percentage of that 400, which will only need a small 10%, 15% pullback in price of ADR. Yeah. So I've already tested this manually, and it seems to improve the SIH performance quite a bit. So that's my next thing to do. I've got a feeling this is going to continue. I'm going to just extend that down. This is such a big sell-off. I'd rather get in with these guys because they'll still be there, some of them, and that at least gives us a bounce. Where we are here, there's just this, which there is buying here, but there's more buying here, and there's adding here. So I'd rather get out here. I think there's more chance of a bounce here than there is where we are now. Right, wrong, don't know. Late, hello. Yeah, you are late, Mark. It's 9:44. We started at 8 o'clock. I'll let you off because you can watch the video, but you can't because that will be another 2 hours of your life you'll lose. Anyway, it's been quite a good session this morning, considering I didn't have anything planned, but they often are the best sessions, the ones that aren't planned, because we just talk about stuff that is important and people want to talk about. So that's what we did. So yeah, we covered quite a lot of ground today, which is good. So back tomorrow. We've got a lot of movement at the moment on this, a lot of this stuff. So just be careful today. We've got the pound coming up. So yeah, back tomorrow. We'll do a recap of the week tomorrow. We'll see what's happened this afternoon with the pound interest rate. I don't think Trump's got any announcements today. There's a lot of ADRs going off. We're going to get a lot of movement today. Look, Aussie US now 125 ADR. This is Aussie and New Zealand collapsing. Well, no, actually, is it US dollar strength? This is US dollar strength. Look, a lot of US strength at the moment. They like FOMC. They're liking what they heard yesterday by the looks of things, the markets. So good money making opportunities today. I'm going to hold on to these as long as I can while this is rallying. So yeah, just be a little careful today, obviously, but I'll go through a recap of the week tomorrow. And then, yeah, we'll see where we go from there. And today I'm going to finish the video for the opening range breakout, the new one, and get that done. So hopefully I'll have that out tomorrow, or maybe even this afternoon if I get it finished. You never know. That'd be good. But I'll post about it and let everybody know when it happens. All right. Have a good one. Anything you need, let me know. Anything you want me to cover in the live rooms, let me know. I will try and get that poll done at some point. Yeah, and I just need some time basically. So that's the one thing you can't buy. All right. So have a good one. Anything you need, let me know, and I'll be back tomorrow.